Hi, everyone. My name is Kira, and I will be your moderator for today. Welcome to our webinar on the life cycle of a distressed property. Your phone lines have been muted for the duration of this presentation, but you may use the Q&A panel to ask questions throughout. We're recording today's webinar, and we'll distribute the recording and the slides later on. We're very excited to have Rick Sharga, Executive Vice President, and Mike Jansta, Senior Vice President, with us for today's webinar, so let's go ahead and get started. Mike, you now have the ball.
All right. Thanks. Let's get started. Let's begin by talking about what we're going to be discussing today. We'll start with who the company is, who Auction.com is, what our role is in selling foreclosures and those bank-owned REO properties. We'll talk about what a foreclosure property is and the distressed property life cycle, the differing stages a home goes through as it goes through the foreclosure process. We'll talk about how a property goes into foreclosure, some of the common reasons why a property starts the foreclosure process. And then we'll go into buying opportunities. These are some of the unique ways that Auction.com brings properties to market that wouldn't already be coming to market. We'll discuss what a pre-foreclosure is, talk about our foreclosure sales, and those post-foreclosure online bank-owned property sales. And we'll close it out by talking about some foreclosure real estate trends, the trends for the rest of the year, and an outlook for 2016. In the end, our goal is that you know what's available in the marketplace, where it comes from, and where to get started. So let's start by talking about Auction.com. Auction.com is the nation's leading live and online real estate marketplace. There's a powerful combination of real estate auction and auction experience in the company. And we've delivered a new marketplace technology, an online platform where real estate is bought and sold online. And we've really revolutionized how foreclosure sales are conducted out on the courthouse steps. Auction.com is privately held. We have over 1,000 employees throughout the U.S. And to date, we've sold over $34 billion in real estate since launching in 2007. That equals over 200,000 sold and closed properties in residential and commercial real estate sales of distressed and non-distressed properties. But today, we're really going to focus on distress. And one last thing, we wanted you to know that Auction.com did have an investment from Google. They purchased a stake in the company for $50 million, so we're happy to be part of the Google family. And we're very excited to talk about how we're conducting these sales. So let's talk about our role as an auctioneer. We're a technology provider. We bring tens of thousands of properties to market each year, and we're bringing buyers and sellers to this online platform to make it more efficient, more transparent, and easier than the traditional real estate transaction. A real estate transaction can get very complicated, and bringing some efficiency and some transparency really is a breath of fresh air into real estate sales. We're an auctioneer of real estate assets in both live and online auctions, and some of our clients are major banks, financial institutions, and private investment funds throughout the country, including the GSEs, those government-sponsored agencies. Auction.com is licensed as a real estate broker and auctioneer in all 50 states and the District of Columbia, but we're not a realtor. We don't represent buyers. We're not members of the multiple listing services. We're just a legitimate marketplace for investors and home buyers to meet and buy real estate properties.
So, Mike, there's a question about what actually the foreclosure process is, how it works, and what the various stages mean to that investor, anybody looking to buy these properties as a real estate investment. A simple way of looking at it is that there are really three stages in the distressed property life cycle. You have the pre-foreclosure stage, you have the foreclosure stage, and then you have the post-foreclosure stage. And what gets confusing is foreclosure is one of those words in the English language that is alternately used as an adjective, a noun, a verb, a pronoun, and probably a predicate in some cases. But for today's purposes, let's talk about this as being a continuum. Borrowers in early stage of default, and these are people who have typically missed 90 consecutive days of payments, or what we call pre-foreclosure. We'll talk a little bit more about the notice of default stage in a moment, but the kind of properties that are typically available in the pre-foreclosure stage are properties that are being marketed by realtors, typically as a short sale. And a short sale simply is a sale where the lender is willing to allow the borrower to sell the property for less than is due on the mortgage. They're kind of complicated. There's a lot of negotiating that takes place between the realtor, the lender, the buyer, and the defaulted borrower. But that's typically one of the ways you can buy a property in the pre-foreclosure stage. There's properties in foreclosure, which means that they're scheduled for a live auction. We'll talk a little bit about the types of auctions that are being handled there. These are typically events where investors attend, buy the properties on site, and if they don't buy the property on site, those properties are returned to the bank, which we're referring to as post-foreclosure properties. And this is a little bit where some of the confusion typically comes in conversation. People buying bank-owned properties, REO properties, referring to them as foreclosure properties because they've gone through the foreclosure process. But again, you have pre-foreclosure properties where the homeowner's in default. You have foreclosure properties where an auction sale has been scheduled. And then you have post-foreclosure properties where the lender has actually repossessed the property at the end of this process. So why don't we talk a little bit more in detail about how the process works. When you take out a mortgage, you basically agree to pay the lender back what you borrowed with interest. People start missing their payments, and the way that a lender can try and recover the amount owed on a defaulted loan is by going through a process called foreclosure. And the foreclosure process means the lender will either sell or repossess the property from the borrower, and repossessing the property, they'll then remarket the property and try and sell it to mitigate whatever loss they've had on this. The process begins when a borrower defaults on a loan, and that typically happens after a borrower has missed 3 consecutive months or 90 days of payments. In some states now, due to some new rules that have been put in place over the last few years, the foreclosure process doesn't really begin until somebody's missed 120 days of consecutive payments. But in any case, when that happens, the lender will typically send a notice to the borrower, which is called a notice of default, which tells that person that they have a certain period of time to cure that default, bring the loan back to current status, or they'll be subject to a foreclosure. In a judicial state, we'll talk a little bit about how the process varies. There's a similar process that's called a lis pendens filing, and basically it's an initiation of a lawsuit that would then allow the lender to foreclose on the borrower and again, try and mitigate whatever loss has been taken. There are a lot of rules in place and regulations in place to help a borrower avoid a foreclosure. We've seen millions of loans that have been modified by lenders and servicers over the last few years during the peak of the foreclosure crisis. And typically what a lender will do is work on a modification program that will either extend the length of the loan, which reduces monthly payments. In some cases, they'll reduce the interest rate on a loan, again, to reduce monthly payments. And in some cases, they'll even forgive some of the debt. Generally, a loan modification might include all 3 of those components. If any or all of those work for the borrower, the loan is brought back to current status and that property is removed from the foreclosure process. Typically, at that point, the property is not available for sale, so it's not really an investment opportunity at that point. During the process, the homeowner, until the day of the foreclosure sale, has the opportunity to try and sell the home, either a traditional sale if they have more equity than what's due on the property as part of the loan terms, or via a short sale, which, as we mentioned before, is a sale where they sell the property for less than what's owed, but is still an amount that the bank will accept as full payment. There are other things. There's a deed in lieu of foreclosure where the lender basically stops the foreclosure process but takes the deed back on the property. Sometimes the borrower will file bankruptcy, which doesn't get rid of the foreclosure but freezes things in place and extends the foreclosure process to buy a little bit more time for the borrower. There are also things like cash for keys, which is where the borrower will receive a check from the lender basically to agree to something like a deed in lieu and move out of the property. But there are a lot of steps that are taken that help people avoid a foreclosure. The kind of properties we're going to talk about today are properties where there simply was no way for the borrower to stay in the house, and the lender really had no alternative but to foreclose on the property in order to recoup their losses. As I mentioned earlier, these processes do vary pretty wildly from state to state. Some states practice a judicial foreclosure process. About half of them do. About half do a non-judicial foreclosure process. As you might imagine, the judicial process is a little more expensive, takes a lot more time, but since it goes through the court system, there's very little latitude for a borrower to come back after the fact and challenge the ruling. A non-judicial foreclosure is where you do occasionally see a lawsuit come up from a borrower who feels that the process wasn't done the right way. But whichever process is being used, the formula is pretty similar. There's a statutory definition of when a borrower goes into default. There's an initial notice of default, either a notice of default or a lis pendens filing, which also comes with a timeline. And at that point, the borrower is told how many days they have to cure the default before the property is auctioned off. If the loan isn't cured by that point, there is a foreclosure sale. And at the foreclosure sale, one of two things happens. Either some investor makes an offer on the property the lender is willing to take, or if no offer is made that's high enough for the lender will repossess the property and take it back on their books, at which point it becomes something the industry refers to as an REO, real estate owned by the lender. So that's basically how the foreclosure process works. We're going to walk you through some of the buying opportunities, and we'll start with a buying opportunity that really doesn't occur too often on auction.com. It's buying properties when they're in the pre-foreclosure process. There's really only two ways to buy a property in the pre-foreclosure process. You can do a traditional sale that's often referred to as an equity sale, and that's a case where the borrower, even though he or she is in default, has enough equity in the home that they can sell the house for enough to pay off the balance of their mortgage and still typically walk away with a little bit of money in their own pocket. It's very much a traditional real estate transaction, usually is done through a local realtor, and in many cases, you probably won't even know that the house is in foreclosure. More typically in foreclosure, especially since we've just gone through one of the most volatile foreclosure crises that the housing market in the United States has ever seen, is you're going to have a short sale. A lot of people, unfortunately, bought a property at the peak of the last housing boom back in 2005, 2006, 2007, and in many cases have found themselves being 50% or more upside down on their loans. So they owe 50% more on their loan than the house is actually worth, even in today's market. The homeowner may have been able to negotiate the opportunity with their lender to sell the property at a much lower price than what they owe. It's a better outcome for the borrower than a foreclosure because they actually get to leave more or less on their own terms and have an opportunity to resuscitate their credit a little bit more quickly than in a foreclosure. And it's an opportunity for buyers because you're typically going to wind up getting a property at somewhat below market value. You're also probably going to get a house that's in a little bit better shape than a home that's gone all the way through the foreclosure process, maybe has been vacant for a period of time. Short sales were very, very popular a few years ago. As home prices have gone up and the number of properties that are underwater has gone down, we're seeing fewer and fewer short sales, and we see very, very few of those on auction.com. Mostly this is because most of the foreclosure inventory you find on auction.com is given to us from the lenders, from the servicers, and short sales typically are still under the control of the borrower, and we don't get a lot of that inventory in. So most of these are the kind of sales you would do as an investor outside of auction.com, and Mike's going to walk you through in a little bit more detail the types of properties you're typically going to find on auction.com.
Thanks, Rick. Yeah, that's a great explanation of how properties end up into the foreclosure process and the pre-foreclosure portion of the house in the distress cycle. The two types of auctions that auction.com conducts are very different types of auctions. One's the foreclosure sale that Rick was talking about. Sometimes those are called trustee sales or sheriff sales. Those are the auctions that are out on the courthouse steps that happen in live venues, sometimes in hotel ballrooms. Auction.com has kind of revolutionized how these auctions are conducted in the states where we conduct them. And in many other states, we market properties for the banks and financial institutions that are going into these sales to try and find more investors for them. So we do market those properties in 50 different states. The second type of auction is when they do become bank-owned. They didn't sell to an investor. They didn't sell to a home buyer out on the courthouse steps or at one of these foreclosure sales, and the bank repossessed that home as a bank REO or real estate-owned property. And those are our online auctions that we conduct in our weekly sales online at auction.com. one of them you may need cash the day of sale. The other one might have financing options. The online auctions, there's a lot more time to do research on those properties. The first type of sale we're going to talk about is the foreclosure sale. This is the final step in the foreclosure process. This is the part where the homeowner is going to lose the home. It's going to be at a foreclosure sale. These usually happen in public on the courthouse steps or in a courtroom. We like to conduct them in ballrooms where we can. But it's either going to sell to a third party at this foreclosure sale, or it's going to revert back to the bank as an REO. Probably
important to point out here, Mike, that historically these foreclosure auctions have been the purview of professional investors. And it was a very closed community of people who pretty much came in knowing which properties they were going to bid on and which ones they were each going to buy. There's also been some recent reports of fraud where there was actually price setting in advance of some of these sales. So one of the things that auction.com has been able to do is to open these kind of events up to the general public and really conduct legitimate open auctions for people to bid on. The benefit has been that more people have been able to buy these properties, and actually the sellers, the banks and the servicers, have been able to get more of their losses covered because a legitimate auction often returns a higher return to the note holder who's trying to cover their losses. Right, that's a great point, and that's the transparency that we try to bring to these processes by marketing the properties, by marketing the events, having more people come out to them. There's just a lot less opportunity for collusion. Some of the benefits when you're buying these foreclosure properties is that you're pretty much going to get the best price on the properties at these foreclosure sales. This is the point where the bank doesn't want to take possession of it. It's going to a public sale, and they would rather it sell to an investor than have to take it into their own inventory as a real estate-owned property, which means you can get a great deal. Sometimes up to 30% below market value. It can be more, it can be less. It really depends on the state of the property that you're looking at. There's great investment opportunities that you'll find at these foreclosure sales where you can start to build a real estate portfolio. There's properties you can flip or buy and turn into rentals, but there are some risks. There's potential hidden liens. It really depends state to state, county to county. Some states like Florida is a super lien state where, water bonds and different things can pass on to the buyer, but it won't to the bank if the bank buys it at the foreclosure sale. It's something you really need to do your research on and make sure you know what you're walking into. Rick, you were telling me about a property where someone bought the second lien on a mortgage and not the first that was secured by the house, and really what they were buying was some debt that they're never going to get back. And so knowing what you're looking at, doing your research, talking to some professionals in the market if it's your first time, or just showing up at one of our auctions and asking the staff there. They'll be happy to help you out with whatever information we can give you. It's highly likely, it says possible here, eviction process, but it's highly likely that you will have to conduct an eviction. If the homeowner is being foreclosed on, they're probably still in that house at the date of the foreclosure sale, and they might leave, they might not leave. These are things you're going to have to figure out because the laws vary from state to state and even county to county. And to that end, if someone's in it, you can't do an inspection. They haven't been foreclosed on yet. This is the foreclosure sale where that homeowner will be foreclosed upon. So that's their house. You can't go inside and look at it. There's no interior inspection. That's trespassing. You really can't even walk on the front lawn, for that matter. But you can drive by and look at it. You can look at the neighborhood, and you can do your research with local market comps. We don't want to scare you away, but we do need you to be aware that there are some risks out at these sales. So a couple of quick points on that. Most of these foreclosure auctions are also cash only. So these are not properties you can get financing on. Typically, you need a cashier's check or cash. And very often it's due at the time of the transaction itself. In some cases, you might have 24 to 48 hours after you make a deposit, but in general, it's cash only. There is no redemption in terms of your ability to change your mind. So if these properties are sold as is, where is. To Mike's point, you really need to do your due diligence up front. We recommend, if you know somebody in the title insurance business, wouldn't be a bad idea to run the title report in advance, or at least a preliminary report.
And a lot of the properties we have on auction.com, we post those as well.
When we have them, we do. You're absolutely correct. So to do your due diligence, we try and make it as easy for you as possible. The other thing, speaking of redemption, is that in some states, states like Michigan and Ohio, there's actually a redemption period that you need to be aware of. So the defaulted borrower who's being foreclosed on in some cases will actually have the opportunity to come back and force you to sell them the property back at whatever price you paid for it, plus some administrative fees, if they're able to get the money together to buy the property back from you. That very rarely happens because most of those people can't get financing because they've just been foreclosed on, but it does rarely happen, and you need to check the laws in your state to make sure you know what you're getting into.
Because some states can be like 30 days, and others, like Michigan, can be 6 months, 12 months on certain properties. So it really varies from state to state.
So if you're brand new in this, it's not a bad idea to work with a local investor group, a local real estate professional, or even a real estate attorney to make sure that you're covering your bases as you get started. If you've done this for a while, you probably know all the things that you need to deal with. But for new investors, we really recommend that you get some help when you get started.
Right, but if you do that due diligence, I mean, you can find some great deals at these sales, and don't be scared away. What it takes is doing your homework and walking into these sales confidently. And when we talk about foreclosure sales, Rick touched on this earlier with non-judicial states versus judicial states, but there's really two different types of foreclosure sales that happen in these different states, right? And so we're marketing properties for all 50 states. And whether it's a judicial state or a non-judicial state, but you need to know that the sales are conducted much differently. The states that auction.com actually conducts the foreclosure sales, those are non-judicial states. And the non-judicial sales are conducted by a third-party sales agent. This can be someone that's assigned by the seller or the lender or the bank. And oftentimes it's auction.com. We do that in, I think, 10 or 11 states right now. But we open in new states and we market properties in others. The auctions can happen out on the courthouse steps. I know, like in Arizona, for instance, by law it has to be on the courthouse steps. It doesn't matter how hot it is. We can't pay for a ballroom for the air conditioning. You got to do it out in the sun. And in other states like California, we rent ballrooms and we try and make it more comfortable for all the investors to come in and kind of bid in a more professional environment. The judicial sales, those are normally conducted, by the courts or a court-appointed official like a sheriff, and they can happen in courtrooms or they can happen in meeting rooms at the county, court or at City Hall. They can be various places, but they are overseen by the courts, and so in most of those judicial states, like we're barred from even conducting those auctions. But we have banks and financial institutions that want us to market those properties to investors like you guys so that you can find out about these properties and know when those sales are being conducted. So you'll find thousands of them online at auction.com. So those are the live auctions. Now we're going to move into the online auctions. We did touch on this a bit, but there are some online foreclosure sales that happen in Florida only. I think there's 24, 26 counties. I can't remember the exact number. They conduct online sales of those foreclosures, and you can check that out. We market a lot of those on auction.com as well. But the primary online auctions that we conduct are bank-owned and non-bank-owned REO properties. And those are bank-owned properties that have gone through the foreclosure process. They didn't sell to a third party, and now they're in online auctions that are occurring on auction.com. An example of a bank-owned property would be, name a major bank. They've had loans that have gone bad, and they took that property into their inventory. But non-bank-owned could be an investment group that bought a portfolio of non-performing loans of these bad mortgages, and then they foreclosed on them. And now they're trying to sell those properties. They come to someone like auction.com because we have a giant network and large marketing group, and we market these properties for a financial institution that bought a portfolio of loans. So, but again, just like in any real estate transaction, you have to do your due diligence, whether it's bank-owned or non-bank-owned. In our weekly auctions, the properties are also sold as is, where is, with no warranties of any sort, but many of them have open houses, a lot of them are vacant. Some of them are still occupied after the foreclosure sale and will require an eviction. And let's get into some of those details here, some of the benefits and the risks. Potential investment opportunities. Any one of these homes that we're talking about, bank-owned, non-bank-owned, REO, these are great investment opportunities. The properties sell below market value. You have an institution that's selling this property. It's not a homeowner that is emotionally attached to the property. They're looking at dollars and cents, and they're looking for a disposition opportunity. So you can see some big investment opportunities across the bank-owned online auctions as well as those foreclosure sales. Many properties are vacant, like I mentioned, and they allow interior inspection, which means that you can go in with an agent or you can make an appointment with the listing agent on that property. Sometimes they have set open house dates. Those will be on the property detail pages. And there's the potential to buy income-producing properties as well. Some of these investment groups that I was talking about earlier, they'll buy the non-performing loan, the bad mortgage. They'll do the foreclosure. They'll take care of the eviction. They'll fix up the house, and they'll rent the property. And then when the value goes up on the property, they say, hey, you know what, let's sell it. We'll make a profit on the house. We've been making a rental income, and I can sell it to an investor with a tenant in there, with a lease. It's like a turnkey operation. A lot of those are financeable as well. So you can buy an investment property that's really turnkey. The house is fixed, the tenant is in, the lease is in place, and all you have to do is buy it in the auction, and a lot of them do have financing as well. Of course, there's some risks, just like with any real estate transaction. There could be hidden liens that the foreclosure didn't wipe out that are still attached to that property. Usually a bank-owned property, those things get cleared up before they go to sale, but there's certain properties that they don't. And so looking at those preliminary title reports to see what's on there. You can also purchase title insurance with a lot of these properties as well, which I highly recommend in case something does pop up out of the blue, and that's not very expensive. It's usually a few $100s. And the properties that are occupied, and many of them are because they're coming right out of foreclosure and going into our online auctions, they might be occupied. So you may need to worry about an eviction. That occupancy might be your problem to take care of, but that also means that you're probably getting a better deal on that property as well. So if you have to do more of the work on it, there's usually a higher discount on the property. Like I said, these are institutions that are selling it, not unrealistic home buyers. And so, again, if those are occupied, they will not have an interior access for inspection like the vacant properties we have. But those are all sold in the same auctions next to each other. So based on what your model is, you can do your own financial model on what you plan to do with the property, whether it's going to be a rental, whether you're going to sell it and flip it, whether you're going to move into it. Do your homework on what you're looking to buy, and then figure out what your price is going to be. So I touched a little bit on this, the types of REO properties that are on auction.com, these institutional sellers that are motivated to move the properties. So we talked about vacant properties. Those aren't occupied. Like, there's no one in it. They'll usually have open house dates that are posted on the site, or an agent that you can contact to show you the property. Broker co-ops. So if you have a real estate agent, many of these properties, have a co-op that's offered to your agent. And if you go into the search bar on auction.com, you can actually click a button that'll show you just those, if that's something you're looking for. And also financeable, right? So that's another button you can click. So if you have an agent and you need financing, you can click those two buttons, and instead of looking at 1,000 properties in Ohio, you can look at 100 properties. But there's a lot more options for vacant properties. There's occupied properties, which we talked about, that may be in differing stages of eviction. And whoever's buying the property is going to be responsible for that occupancy. So you could buy the property and you could go show up to it, and it could be vacant, or maybe it's not. You might have to talk to the buyer and ask them to leave. Maybe you negotiate with them, but it may require an eviction of the owner or their stuff. If they leave all their personal belongings in there, you'll have to do an eviction, of their personal property as well in many cases. Almost always occupied properties are non-financeable just because there's no interior inspection, which is usually required for financing. But broker co-op may be offered as well, so your agent might get a commission for helping you through the process. Again, you can filter through those in the auction.com search bar. We offer pre-auction bids on select properties. Certain banks and financial institutions, if you're looking at an auction, the date's coming up, you might say, hey, you know what, I'm going to throw a number out there. Some banks want to see those numbers in advance, and they might just cancel the sale altogether and take your offer. So that's something you might want to look at as well. Newly foreclosed is something that we kind of came up with. It's a categorization of properties that these were never really for sale in the past. So when a property was going through the foreclosure sale, and Rick talked about a short sale, that's usually with the homeowner negotiating with the bank and their agent, right? And then the foreclosure sale, those are the ones that happen out on the courthouse steps. But when it goes back to the bank, there's usually this period where a property would go through a conveyance period. The title would convey over to the bank, and the bank would try and repair the property and take care of the eviction. And it would take months, sometimes even years, right, before the bank would put that property on the market. Auction.com kind of invented this newly foreclosed auction where a property gets foreclosed on at that foreclosure sale, and then just days after that goes right onto Auction.com in an online auction. And that's where a lot of these occupied properties come from as well. So just like the occupied properties, there's likely people in it or there's stuff. It may require an eviction, but we do have interior inspection reports on many of these. You know, broker co-op or agent might be available as well. And so that's that real estate professional that you can rely on to help you do some of that due diligence and look at some of the title work to know what you're getting into. And again, one thing I want to touch on is that a lot of these properties, we've worked with the financial institutions to have no buyer's premium, right? So they're willing to pay that 5% buyer's premium, which is our standard buyer, charge on the auction sale. A lot of these don't have it at 0%. So it makes it even more attractive for an investor because the financial institution is absorbing that. And so those are basically the three types of REO properties you'll find on the site. I like the newly foreclosed ones because you really get significant discounts to market price on those. But again, you have to put some elbow grease into those.
Yeah, so the rule of thumb, Mike, across all these property types that you've been talking about is the greater the risk, the greater the potential reward. And it's really true of the properties that are going out at the foreclosure sales. And if you looked at the three types of REOs that you just talked about, the least risky, the vacant REOs that have been cleaned up and the title's probably been clear, those represent the least risk, but they'll also probably represent the lowest discount. So you're going to save the least amount of money on those kinds of properties. What we're finding as we track investor activity across the country is that typically an investor is buying these types of distressed properties for somewhere between 75 and 85 cents on the dollar. So a realistic assessment of what you should be looking for in the way of a discount is if you're doing better than 25%, you're doing really well. If you're doing less than 15%, you may want to sharpen your pencil a little bit, or it could have to do with the market that you're in. Some markets, like most of California right now, have very little inventory, so even distressed properties are going at almost full market value. So, know what you're doing going in, take a look at the opportunities, make sure you have a number in mind and stick to it. It's easy to get caught up in the excitement of an auction, whether it's a live event or an online auction. And Mike touched on our online auctions. We really didn't spend a whole lot of time about that today. We have other webinars that you can tune into that walk you through that in great detail. But just a quick synopsis, we do very much what looks like an eBay-style auction online. It's a timed event. You're bidding at predetermined increments that you can see on the website. These are all reserve auctions, so if you don't meet a minimum number that the seller has established, there is no sale. Sometimes the properties will repeat in multiple auctions until we get a seller willing to either bring the price down or we get buyers willing to pay more money. You'll be able to tell immediately from looking at the page if it's a property you can finance or a property you have to pay cash on. And we do charge a 5% buyer's premium. So as an investor, you have to build that into your final price, your final financing, to make sure that you can handle that on a particular property. One thing we do that's a little different than eBay, though, is there's no sniping on auction.com. So if you're the winning bidder with 3 seconds left and somebody comes in and bids an extra $1,000, we automatically extend the auction for a few minutes so you have a chance to come in and win that property. So what we always tell people that are bidding at our auctions is make sure you're there when the auction is scheduled to end so you can make sure to protect your territory. You can also, by the way, download a free iPhone app that lets you bid wherever you might happen to be, as long as you have cell coverage. On a property you've registered for, we have a native iPad app that we've sold thousands of properties on since we launched it about a year ago. Both really good tools for people that like to use mobile devices and are on the go. The reason we're having this discussion today is because foreclosure properties have been something that real estate investors have always been interested in, and there are always foreclosure properties. What I can tell you about foreclosure properties is that there are fewer and fewer of them going to market. If you look at some numbers we got from our friends over at RealtyTrack, you can see that repossessions peaked several years ago. And the peak of the foreclosure crisis was probably in late 2010. This is showing a year-over-year change, so it's a little bit different if you're trying to figure out what you're following here. But the red line that's running across there shows you when REO inventory actually peaked. And that was a few years ago. So we're seeing those numbers consistently come down. But even in a normal year, about 1% of all homes go into foreclosure. 1% of all active mortgages, rather, go into foreclosure. So in a normal year, you have about 500,000 loans going into foreclosure. Of those, about 200,000 ultimately wind up becoming REOs. We're still running roughly twice that number in today's market. What you're seeing, though, is very different geographic trends. So if you happen to be in California or Texas or Oregon, some states that recovered very quickly from the foreclosure crisis, you're seeing fewer and fewer REOs come to market. If you happen to be in the Northeast, you're in REO heaven. If you want to buy houses in New York, New Jersey, Pennsylvania, Massachusetts, Maryland, Ohio, Michigan, lots and lots of properties coming to market on loans that have been seriously delinquent for 2, 3, and 4 years. It's taken over 1,200 days to do a foreclosure in the state of New York. So these are loans that are very, very old loans. The properties may have been vacant for a period of time just because it takes so long to get through the process. Sometimes the borrower actually leaves. Lots of opportunities in those states, a lot of inventory still coming to market in Illinois and Florida. So again, regional variances. RealtyTrack is a good website to take a look at foreclosure trends. You can search by different states, by different locales on auction.com to find out which properties are coming to market in the near term, which ones are actually for sale today. Foreclosure starts, we talked about those initial notices of default, and this really shows you what's been going on. There's been a little bit of a blip recently. There's always a blip in October. Foreclosure starts go up that time of year every year because the lenders typically will put a moratorium on foreclosures between Thanksgiving and Christmas. So they kind of rush to get foreclosures into the process in October. But what we are seeing is fewer and fewer homes going into foreclosure. And in fact, the loans that have been issued over the last few years are performing twice as well as mortgages perform historically, in no small part due to the fact that it's been so difficult for anybody to get a loan. So the people that are getting loans are just performing really, really well. So the news for you as an investor is that you're probably going to have to look harder to find foreclosure home opportunities over the next few years while lending standards and credit remain really, really tight. But there are opportunities coming. You may have to look at different geographies. You may have to look at different types of properties. But there will be opportunities for those people to do their homework and aren't afraid to search a little bit beyond their local markets. What we're looking at, by the way, in terms of the overall housing market, is that sales volume this year is going to improve from last year. We're going to see between 5.2 and 5.3 million homes sold. New home sales will be somewhere between 450 and 500,000. And home prices by the end of the year are likely to be appreciating on a year-over-year basis between 5 and 6%. What's important for you to note out of that is of those 5.3 million homes that are going to be sold this year, less than 10%, probably about 7% of those, will be distressed properties. At the peak of the foreclosure crisis, that number was in the 40% range. So it's a huge, huge drop-off. What's equally interesting to you as an investor is that while those numbers have been dropping, the number of homes sold on auction.com has been going up. So while the number of properties as a percentage has gone from 40% to 7%, auction.com sold 35,000 of these homes 2 years ago, 50,000 a year ago, will probably sell 60,000 this year. So the lenders are increasingly coming to us to offload their distressed inventory more quickly, more efficiently, because they know we have a lot of investors like you looking to buy the properties. So while there are fewer opportunities, you're seeing probably more of them on auction.com on a percentage basis than you saw in years past.
Yeah, I just saw 10,000 the other day.
Yes. Yep. Foreclosure inventory is going to continue to decline, as I mentioned. I really believe personally that we're going to be back to normal levels of foreclosures probably by 2017. So you have another year and a half of above average levels of foreclosure activity before we finally start to see the numbers settle back down. But that's a year and a half of buying opportunity for those of you in the market. What we're seeing bigger investors do is start to change their models a little bit. So they're looking for less of a discount on the initial purchase and more of a return on rental properties that they buy and trying to make their money off cash flow instead of off home price appreciation. The housing recovery will continue to be a little bit slow. There's a lack of inventory and there's a lack of credit that makes things very, very tight for buyers. So if you're a flipper, particularly in markets where there's very little inventory but a lot of demand, California comes to mind yet again. There are opportunities to buy properties at close to market value and still sell them at a significant profit. And 2016 is going to feel a whole lot like 2015 overall, in that we'll see a little bit more inventory of existing homes for sale. We'll see a little bit more new home stock. We will continue to see a few more of these REOs come to market as the backlog gets diminished in the northeastern states and some of the Midwestern states. And we'll finally start to see the baby boomers give way to the millennials who will come into the market as we kick them out of our basements and make them play Xbox in their own apartments. So 2016 should be a pretty good year overall for housing. Should have a lot of opportunities for investors to participate. And we hope that you'll spend some time with us at auction.com to take care of all of your investing needs.
Great. Thanks, Mike and Rick. And thank you, everyone. We're unfortunately out of time today, but we've taken down all the questions and we'll be answering them on our community. I've pasted the link for the community into the chat window, and it is pretty simple. It's just community.auction.com. And we'll be sending the recording and the slides out shortly. And if you've joined, you'll be getting them via email. So thank you, everyone, again, for joining today. Have a great afternoon.